He was the bank boss who said he'd take a salary of just $1 a year until he got Citigroup back in order. Now, Vikram Pandit has done that. He's moving on to the next stage in his plan for Citigroup. He's expanding east. This is Asia's business. Hi, I'm Susan Lee. This is Asia's business. Vikram Pandit was appointed Citigroup CEO at the end of 2007, just as the financial crisis was unfolding. So struggling with billions worth of bad mortgages on his books, the U.S. taxpayer came to the rescue of Citigroup with $45 billion. And it turned out to be a good investment. The U.S. Treasury not only got his bailout money back, but it also made an extra $12 billion in profit. Now, as for that $1 a year salary, well, after Citigroup returned to profit, the bank's board rewarded Pandit with a $1.75 million pay raise. And this week I caught up with Vikram Pandit in Singapore as Citigroup held its first board meeting in the Asia Pacific. And I began by asking him if he saw Asia as a future for his bank.
Mr. Pandit, thank you so much for making time for us on Bloomberg Television. So here we are, the first board of directors meeting for Citigroup in the Asia Pacific. Of course, Asia is growing. So is your net income from this region, 30% for 2011's first half. Would you say that the future for Citigroup lies in the Asia Pacific?
It's a big part of our future. We're not new to the Asia Pacific. As you know, we've been here 110 years. And 110 years all over Asia, not only in Singapore, but in Manila, in Yokohama, in Shanghai, and Calcutta. So Asia's been part of our past. It's clearly a big part of our present, and it's going to be a big part of our future, too. And you know what's going on around the world. The growth's coming from the emerging markets. The Asian consumer is a significant part of what's going to drive growth around the world. And we're just happy we're here in Singapore and in Asia, able to serve our clients as they connect to the rest of the world. And it's nice to have our board of directors here to see that enthusiasm and that growth on the ground. And they've had a very good couple days.
Let's talk about growth in the Asia Pacific. Huge numbers we've seen in the last couple of years, but we just had this economist survey that came out saying that China's growth, as fast as it has been for the last few years, will slow to 5% in 2016. Does Citigroup, do you have any concerns about China's growth going forward?
What we do know is that the growth of all countries around the world is going to be influenced by each other still for a while, and there are some questions about how fast the developed markets might grow. Having said that, we are quite comfortable that China's growth cycle is a secular growth cycle. They're going to continue to grow at a very significant pace for an extended period of time. And we not only believe that, but we're investing in China, by the way. We've gone from 25 branches to 43 branches. And by the way, in the greater China area, we've gone from 50 to 150 branches. And these are not just branches. These are smart branches. These are perceptual scale branches. So we reach out to a lot more people. And we're going to keep continuing on that path.
Let's talk about your expansion plans in China. As you said, big growth right now, 150 branches in Greater China. What about, I guess, expansion of headcount? I know Citigroup wanted to maybe increase your staff to 12,000 in China. Is that still on track?
Well, we're over 6,000 people in China right now. That's a large number. We've got a number of people all over Asia as well. And we look at this expansion plan from the perspective of which clients can we serve, should we serve, and what does it take to serve them. And whatever it takes, we'll make sure the resources are in place, and if that requires expanding the number of people we have on the ground, we're completely ready to do that.
And do you feel that that's necessary for China in the coming years? Will you open up more branches, maybe add more investment to the country and Greater China itself?
Certainly, as we open more branches, we are going to need more people to support our clients, and that's part of the plan. You know, by the end of this year, we are likely to be in 15 cities in China, and these are some of the most important cities, not only in China, but they're going to be some of the most important cities in the world over the next coming years, and we're just happy that we have the opportunity to grow with China.
Yeah, you talk about slowing growth around the rest of the world. What about decoupling in Asia? And you mentioned that, you know, Asia on itself, it really depends on what else is happening in the world, but maybe that's changed in recent years.
I think there is a question about Asia and the emerging markets and whether they're decoupled or coupled if the developed markets slow down. I can say to you that there are a lot more decoupled today than they would have been 3 years ago, and in a couple of years from now they'll be even more decoupled. It is an open question. Our view is that increasingly as the emerging markets grow and as Asia grows, the growth rate in the developed market will be less of a factor in thinking about the emerging markets.
I have to talk to you also, since we are in the Asia Pacific, about a big market here. That would be Indonesia, largest Southeast Asian economy. As we know, Citigroup in recent years have had some stories there, which includes being barred from issuing new credit cards for 2 years, also from adding wealth management clients for 12 months. What about the reputational risk that Citigroup has taken in that country? How do you feel about that?
We've been in Indonesia for a very long time as well. It's a very important market for us. We have a lot of important clients. And as a matter of fact, we were just mandated by the government to do a bond issue for them as well. And we take these incidents really seriously, not only on the ground to make sure that we're doing exactly the right things for our customers, but we also look at them as learning experiences for what we should be doing around the world. Now, you know, we've got 260,000 people around the world. We're in 100 countries. We have 200 million customers. And so these incidents are relatively rare. Now, that's not an excuse by any means. But having said that, the one thing that is absolutely clear to us and should be clear to everybody is we're focused on our clients, and we want to make sure we serve them well.
Indonesia being an emerging market, of course, developing nation, does this represent to you maybe some of the challenges of doing business in these developing markets, the opaqueness of practices?
I think when you look at the 100 countries we're in around the world, we've done a very good job over the years of making sure that we serve our clients within the fabric of the countries. And that's true not only in Indonesia, it's been true in Singapore, it's true in Philippines, it's true in Brazil, and everywhere else. Every country has its own attributes. And by the way, doing business well, which means serving clients to the utmost of your capabilities, is something that you should always regard as a challenge, and we do.
And you see growth in this region, so in the Asia Pacific, 30% of your net income comes from this region for the first half. I'm sure they'll inch up in the next few years. What about the naysayers on China's economic growth? Some are saying that, you know, there's a high level of bad debts on these Chinese banks' balance sheets, but yet Citigroup wants to get into more lending in the country.
Well, let me tell you a little bit about us, and then we'll talk about China credit. We were earning about $1 billion of net income a year a decade ago, and today we're earning $1 billion per quarter. We had about 100 branches in Asia about a decade ago. Today we have about 700 branches in Asia, and we expect our growth to continue. One thing I'll tell you about China, and for that matter all of Asia, is since 1998, the structural changes that have been made in terms of credit creation, consumer credit, have been dramatic. And so things like real credit bureaus, which tell you what a customer should be able to afford and what the right amount of debt is a customer should have, some of these are unique to Asia. And then on top of that, you have things like loan-to-value regulations that modulate what kind of loans you can make, and of course the regulatory system is very strong as well. You put it all together, it is a very strong regulatory architecture for making sure that credit creation happens correctly. And on top of that, you take a look at the kind of things we do to be extremely prudent in making loans. You put it all together and you find that some of these fears may be based on what people think about what might have happened in the U.S. or certain other parts of the world, but they may not be adjusted for the reality of the credit structure and the regulatory architecture here in this part of the world. One of the things we look at, our loans are growing, our business is growing, and every time you have growth, you look at well, are we doing this correctly? Are we making sure the credits are right? And the more we look at it, the more we go back and say, you know, there's something real going on here. These are very well underwritten loans, and so that gives us a lot of comfort.
So it sounds like you're confident in China going forward.
Well, I would say to you that, that we're very comfortable with the secular path.
Vikram Pandit talking to us in Singapore. We've got a lot more to come from the Citigroup CEO. I'll be asking him for his views on the state of the global economy. Is Europe heading for bankruptcy? How exposed is his bank? And what are his biggest fears? That's coming your way on Asia's Business. Welcome back to Asia's Business with me, Susan Lee. This week, we're talking to Citigroup's Vikram Pandit, the man who brokered one of the biggest bank bailouts of the financial crisis. And after explaining how he's focused on growing in China, we moved on to talking about Europe's sovereign debt crisis. And with so much at stake, how does he see the issue playing out, and what will the impact be on Citigroup?
Mr. Pandit, I also have to ask about your confidence in Europe right now.
I would say to you that we all know the fact that we have a Eurozone which put its currency together as a single currency, and it's coming to grips with the debt levels of certain other countries in that zone. We think this is a issue of leverage. It's not a euro issue. We talk to a lot of the leaders and the business people in the euro community. They're all committed to the euro as being the currency and the eurozone as being the zone of the future. But nonetheless, there are questions about how this debt's going to be dealt with, and the Europeans have a clear calendar, a clear plan as to how they want to move forward. There are questions about economics, but there are also political questions in the sense this is something new, and they're dealing with it. And I think Finland today passed a resolution to approve the EFSF, and there are others that will pass it along the way. So our core view remains the way it has been for a while, which is the Europeans will figure it out. They'll get through the debt crisis, and they'll get to the other side being fully committed to the euro and the eurozone.
Yeah, that's right. You said that European leaders will come to some solution to this issue. Do you think that might include a Greek default?
You know, you have to let the European leaders decide what's best for them and what's best for a successful long-term euro and a long-term eurozone. One thing I will say is they're very cognizant of the fact that they're all in it together.
Mm-hmm. We still have Italy and Spain banning short selling on financial shares, one of the top stories this morning. You know, we heard from PIMCO's co-CEO, Al Arian, talking about this could be progressing into a banking crisis. Do you see remnants of that?
I think it is important to appreciate that there are certain sovereign debt issues, and that's where we started. We talked about the debt levels of certain other countries in Europe. The European banks are like any other banks. They own government securities. There are banks all over the world who take deposits. Sometimes they are put in place into government securities. So you can't blame them for carrying government bonds and European government bonds. And the issue is really to us more about what's going to happen to sovereign debt rather than an issue about the banks. I understand they're interrelated. But having said that, to the extent you have comfort that the Eurozone will figure out its sovereign debt crisis, that should concern us less about the banks.
Now, you addressed this issue in January of this year. Some said you saw this coming, really, with the sovereign defaults or possible defaults we're seeing in the Eurozone. So we're looking at Citigroup with about $31 billion of gross exposure to the pigs right now in Europe. Do you think Citigroup would have to take any haircuts on its investments in Europe?
What I'll tell you is that we'll have even more disclosure on our exposure to not only the southern European countries, but also to certain of the other countries in the Eurozone. And I think that's important for investors to know what we have and the kind of business we're doing with them as well. We believe our exposure to these countries is extremely manageable as a bank.
Yeah, $15 billion of exposure also to French banks. We know there was some concern about French lenders earlier on this year. Are you confident of Citigroup's holdings in these French lenders right now?
We're very, very comfortable with the exposure we have. As I said, some of those numbers are from a different point in time. We'll have more disclosure on that when our third quarter earnings come out, but I'll be very categorical. We're extremely comfortable with our exposure to the European banking system and also to Europe.
Does this remind you of what happened in 2008 with Lehman's collapse? Does it feel like 2008 all over again?
I think this is a fundamentally different time than 2008. I mean, if you think about where we are, look at the Asian banking system. It's in very good shape. The Latin American banks are in very good shape. The American banks have done a great job in recapitalizing themselves, and they're very strong, whether it's in capital. Look at us. I mean, we have 11.6% Tier 1 capital. We have over $40 billion in reserves, and 25% of our balance sheet, 25% of our $2 trillion is in cash or marketable securities. So the banking system in the U.S. is in a fundamentally different place. This, again, is more about the question of sovereign debt in the European countries. How is that debt going to be addressed? And how is the Eurozone going to come together to address the debt and keep the euro intact and growing for the future? As I said, the European leaders will figure that out. But to us, this feels fundamentally different than 2008.
Yes, some are calling a great default similar to when Lehman's went under. Do you think these fears are overblown on the markets?
I think the questions of Lehman or Greek similarities, I think we need to sort of step back and say that they're fundamentally different situations. One was a financial services company, and the other is a sovereign, and it's part of the Eurozone, which means that it's part of a group of countries that care about its future and care about Greece, care about Euro. I will come back to say I think this feels fundamentally different than 2008.
Let's talk about your capital ratios, because recently we heard from Jamie Dimon of JP Morgan. He was talking about these new Basel rules to increase a bank's holding of capital. He said it was un-American. Citigroup being the third largest American bank. Do you feel the same way that Mr. Dimon does?
Let me tell you what I feel very strongly about. I feel very strongly about the fact that we all benefit by the soundness of the financial system and the safety of the financial system, and it is our responsibility, each of us as a bank, to contribute to that. And part of that is capital requirements, and we completely understand that that is one tool, and we ought to abide by that and live by that. But we also believe safety and soundness comes from having a level playing field. And the level playing field is across countries for banks, but it's also across bank and non-banks and shadow banking and other financial institutions. There is more work that needs to be done on calibrating exactly how you create that level playing field so that you induce that systemic safety. But we've come a very long way. We've been pro-reform all the way along, and the one thing we would continue to call for is a well-calibrated level playing field system that promotes financial safety.
And transparency. People need transparency. The public needs transparency on credit products right now.
I think the public needs to know that banks are well capitalized. I think the public needs to know that there's a lot of transparency in credit products that they own. I think the public needs to know the stress tests of banks based on benchmark portfolios and standardized measures. I think the public needs to know things like derivatives are handled correctly on clearing houses and on exchanges. So the public should hold the regulatory and the financial system accountable for making sure they're contributing to the safety of the financial system, because we all benefit from it.
Do you think higher capital ratios will handicap banks in terms of how much you can dole out to companies, individuals, and do you think that might hurt your bottom line, Citigroup's bottom line in the future?
The overriding concern has to be the safety and soundness of the financial system. And of course, you have to put that in contrast with the fact the world needs to grow as well. And that's the narrow balance that we all try to walk every day. And the regulators and the central banks around the world completely understand the trade-offs of the two. Having said that, you cannot grow without a strong financial system and a safe financial system. So having the capital requirements in place and having a lot of the other things we talked about earlier, like a level playing field, are critical to that. I think having that confidence in financial markets is a great inducer of growth as well.
What's the future like for the U.S.? You know, we talked about the sovereign debt issues in Europe. Do you think we might head back into recession in the U.S. if, let's say, Greece does default and we have a cascade?
There is no question that the U.S. also has to grapple with its trade deficit, with its overall budget deficit as well. These are issues that the country has to come to grips with, and it will over time. And it's part of a great rebalancing. We, in the developed markets, borrow too much, consume too much, added too much debt, and we've got to get that corrected. And as you correct that by reducing leverage, you're going to get to a point where you may not grow as fast as you'd like to as you address these issues. So as I look at the U.S., I think we're quite realistic. We're quite realistic about the fact that the U.S. may not grow as fast as we'd like it to grow. Unemployment may be a little bit higher than we'd all like it to be at. I do think creating jobs is the #1 objective for the economy, but I'm also very confident that we'll get through this.
And what about headcount? Because, you know, we've heard about these big banks like HSBC cutting 30,000 individuals, UBS also cutting down on the employees as well. But Citigroup has hired more than 40 MDs so far this year.
So we've done very, very big restructurings here over the last 3 years. We did all our heavy lifting earlier than a lot of the other banks. We're down from 375,000 people to about 260,000 people in the last 3 years. Our costs are down by about $10 billion a year from where they were earlier. So we believe that we've done a lot of what banks needed to do. We are very efficient, but that doesn't mean we don't continue to fine-tune. And fine-tuning comes in a variety of different ways. We are hiring people where we think we really need them. And on the other hand, we're always making sure that we're efficient not only from a cost perspective, but efficient in how we serve our clients as well. That's a continual process, and believe me, we're on top.
So does that mean you'll be adding headcount here in the Asia Pacific or cutting elsewhere in the world?
I think it's likely that as we grow in the Asian parts, that will require more resources. Now, growth doesn't come in straight lines. You grow, you make sure it's working correctly, then you grow again. So you've got to pace yourself in the right way, but I would not be surprised at all over the years if we see more and more resources from Citi here in Asia.
Mr. Pandit, one more question for you. For shareholders of Citigroup, you said that you'll give capital back to shareholders, hopefully in 2012, probably more in 2013. Does that mean in forms of dividends, buybacks, and is that for sure going to happen in 2012?
Well, let me start by saying we think our shares represent compelling value, and therefore we're going to do everything we can to try to use the capital we have available to buy back shares on behalf of our shareholders. And that's a process we expect to start in conjunction with the regulators in 2012. And as more and more capital builds up at these prices with this compelling value, we want to make sure that that capital goes back to our shareholders, and we're committed to doing that. What I would also say to you is that we are in a very special position. We've got something called a deferred tax asset. And what that deferred tax asset does is not only create earnings for us, but creates capital in excess of our earnings every year. And that allows us to really put more capital back to our shareholders.
Mr. Pandit, thank you so much for your time this morning. Thank you.
I appreciate it. Good to see you. Thank you.
Vikram Pandit speaking to us in Singapore. Pandit says he plans to make more frequent trips to the Asia-Pacific region as he checks up on the progress of his Asian ambitions. Now that does it for this edition of Asia's Business. Until next time, I'm Susan Lee.